Welcome to another episode of the Asset Thinking Treasure series produced in association with BNP Paribas. My name is Daniel Yu and I will be your host for this episode. COVID-19 has had a lasting effect on the terms of international trade, from just in time to just in case, from efficiency to resiliency. The reconfiguration of the supply chain is accelerating. The shifts are challenging long-held views on how best to manage a company's treasury. At the same time, they are also reinforcing the value of cash visibility, control, and the importance of risk management. How best to navigate the highly complex environment? How are companies reconsidering their trade and supply chain network to cope with the disruptions? How are rising costs of inputs affecting business? With extended order time, how is this impacting working capital? And are there opportunities to enhance supply chain resiliency? Can sustainable finance play a role? Who best to share insights into these questions other than our guests for today's episode of the Asset Thinking Treasure series, produced in association with BNP Paribas, this year's AAA Best Transaction Bank. Let me welcome Lewis Cheng, chairman of Polygroup International, the world's largest artificial Christmas tree manufacturer, accounting for more than half of the global market. It is also a leading manufacturer of above-ground pools and summer inflatable toys. Welcome, Lewis.
Thank you, Daniel.
We are also delighted to have with us, joining from BNP Paribas, Tim Lee, Head of Transaction Banking Greater China, and Cherrie Xu, Head of Trade Hong Kong. Hello, Tim and Cherrie.
Hello, Danny, and hello,
Morning.
Lewis. Good to be here.
And thank you all for joining our conversation today. Let me start off by inviting Lewis to set the stage. Polygroup International manufactures in 3 locations in Guangdong province, southern China, and also in Mexico. Lewis, perhaps you can share with us how has COVID-19 affected your operation?
Well, like any other businesses, COVID-19 has hit us quite hard and changed a lot of our operations and our thinking about how we run our business. First of all, when we look at labor, most of our labor in the Guangdong province comes from other provinces. And so as COVID-19 was spreading, it was hard to mobilize our workforce and have them travel back and forth from their hometown back to our factories. And so that was a big challenge. So we had to wait a while before we were able to catch up to the number of people that we needed. Secondly, on the supply chain side, supply chain was very slow because of COVID. And so what we had to do was, in terms of materials, raw materials, WIP, we had to buy more locally, buy earlier, and buy more. For example, when we purchase PVC resin, 100% of our PVC used to come from external sources, Taiwan, USA. We had to buy locally since 2019. So as of now, 40% of our PVC is purchased locally. And so if you look at our entire supply chain, we're starting to buy everything, including PVC resin, steel sheets, paper, much more locally than before. We're also buying earlier, so to account for the timing of shipment. And we're raising inventory levels internally to account for it in case of city shutdowns and potentially, God forbid, a COVID case inside our factory and internal shutdown, where we can continue to operate, but we have to operate within a closed system.
Yeah, interesting. A lot of adjustments as a result of COVID-19. And I wonder, Tim, is Lewis's experience with COVID-19 what you hear similarly from the other manufacturers, other clients? And what else have you heard from your customers?
Right, Danny. At BNP, our client portfolio spans across, large Asian corporates such as Lewis and Polygroup, to Western multinationals that are operating in Greater China, Hong Kong and China, both buying and selling. Now, similar to Lewis, I think there's been a lot of impact. I think over 50% of our clients have reported there's been delayed shipment periods, obviously interruption in supply chain, labor shortage, and also increased transportation costs. So these are all presented, significant challenges to our clients. In Hong Kong, for example, I think we've seen a change in the some of our clients, some of the buying offices, and how they have to accelerate and really, accelerate the shipment periods to adapt to accommodate for a longer shipping time, so that the goods can reach the shelves in Europe in time. So these are some of the things that have happened to impact our clients in China. And I think China, they've also substantially eased their, COVID restrictions since June. So some of our clients have reported, a resumption of economic activities. But I think as long as COVID is there, and I think they have a very tight and tough COVID policy, it'll continue to impact our clients. But we haven't seen any significant outflow or migration of production out of China yet.
Interesting, interesting. Now, one of the things, Louis, I understand that you have adopted is some kind of a self-sustaining supply chain strategy, basically manufacturing vertically integrated as much as possible. And this seems to be different from others. Maybe can you share with us why you chose this strategy, and especially as it relates to what's going on today?
It's very relevant today, but this is a strategy that isn't new for us. We started our company thinking that we need to vertically integrate. If you look at our business today, we're about 17 different businesses compiled together into one large plant, one large process. When we buy materials, we buy the most upstream raw material there is, and we make WIP in-house. If you look at our Christmas trees, of all the components that goes into the tree, they're actually made more than 15 months before to the final assembly right before we ship out for Christmas. And so when we embarked on this strategy, it was because we wanted to ensure supply chain timing. We wanted to ensure that the quality of the WIP is high, and so that the final product that we ship out is also high in quality and we ship on time. And we've done that for 25 years now, and especially times like this, it just becomes much, much more relevant. And so this isn't something new for us.
Yeah, absolutely. And of course, but at the same time, Louis, this strategy can be costly, right? To be able to maintain hard assets, keep inventory, and so on. Did you ever think about the asset light approach, as was fashionable at one time, especially to ease the pressure on your treasury function?
Definitely. When everybody was going asset light, we were thinking, could we actually section off these different components and then have them run as standalone factories, take on external business, for example. But as we tried, we found that we much preferred having everything under our own control in-house. It's a very difficult process. It also requires the bank's understanding, who support us for cash flow and short-term and long-term financing for capacity. So we need banks like BNP who understand our business model, understand why we need to vertically integrate, keep inventory so high during the time of production ramp up, and then ship in the months of July to September when shipment is highly congested period. And I think this strategy has worked well for us. This has helped us become the leader in our industry, and so we see no reason to change as of now.
And certainly, as you say, especially during this period of supply chain disruption, it seems to have paid off. Are you, however, in the meantime, able to achieve some cost savings, for example?
Yes, cost savings come from being able to buy supply when we needed to. Because we hold inventories slightly higher during this period. We also buy year-round raw material from our core sources. And so these people know us. We've had our history of purchasing. So during this time of supply shortages, we actually haven't experienced the same as other people who are buying very last minute, very just in time, closest to final assembly. And so that has helped us with maintaining our cost. At the same time, we're heavily investing into automation. If we're able to cost benefit within 3 to 5 years we do it. It not only helps us save over time when labor rates are going up, frankly harder and harder to find labor in China today. We're able also to maintain our leadership position. It's very difficult to find another large-scale manufacturer who's able to and want to invest so much money into capacity, space, human labor, and also on automation to get to the efficiency that we have achieved today.
One of the things during COVID-19, I know that buyers are kind of demanding that you ship the goods earlier, much earlier. And how has this extended shipment period impacted your manufacturing process, your cash flow, for example?
So before we ship out our goods, we built up over a 15 months period, and we ship during the months of July to September, just in time for reaching Christmas. Majority of our goods go over to North America and to Europe. And so during this process, we are holding inventory, means we're holding cash for our customers. And as they are asking for earlier shipment, it does two things. First of all, it requires us to build inventory even earlier, so stressing our cash flow. And at the same time, it actually helps us release our capacity. Because with our same capacity that we have today, if we're able to make Christmas trees, for example, 12 months of the year versus just 9 months of the year, then we're actually increasing our capacity without having to increase our capex. So there's a cost, but there's also a benefit to this. But we're working very closely with our retail partners, and I think that also helps us set us apart because we're able to do this together with them as partners.
Tim, when you listen to Lewis, are you seeing that across the board among clients, similar things are happening? Perhaps which industries are you seeing where the greatest pressure might be in terms of manufacturing or cash flow pressures?
Definitely, Danny. Yes, I think, like Lewis, we have a lot of other manufacturing companies, and they are impacted the most in terms of pressure on the cash flow and working capital. And I think if you hear Lewis and what he talks about, I think that engagement, with the buyers and sellers, that relationship is ever more important now. I think as a banking partner, that's what we're here to do, to help as we understand the extended shipment period, the extended working capital needs. What we try to do is help them secure that buyer and seller relationship, even more so with our financing solutions, we can come in and help. So I think in certain industries, obviously manufacturing, we see that happening, obviously in retail, logistics services. These are all areas that we've seen some impact where I think the pressure on working capital requirement becomes larger and greater, and there's a certain change that needs to be adapted, introduced.
Let me get Cherrie in on this conversation as well, in terms of how, Cherrie, you're helping clients to manage that extra pressure on companies' cash flow and I guess the extended cash conversion cycle.
We are quite active in a number of fronts and taking actions to support our customers. I think firstly, like more other banks, we offer the principal payment holiday for eligible clients under the scheme launched by the Hong Kong MA. Given the trade facility normal with maybe shorter payment terms, so normally the payment will be extended by 90 days. I think secondly, more important, we listen to our customers, like Polygroup. We discuss with them on the payment terms, even the shipment schedule, the credit terms, and they will understand their whole working capital cycle. And after that, I think we successfully grant an additional trade facility for them. More important is the pre-shipment financing. Based on the approved sales order, and then we grant export finance against the invoice. So we support the whole supply chain, both import and export side, to smooth the working capital for the Polygroup.
Now, COVID-19, it seems like such a big factor in what's happening in the world today, but for manufacturers and businesses, we are now faced with something called inflation, something that we haven't experienced for a while. People say inflation was dead, it's not coming back anymore. And yet this is an issue that we're facing decades high in many parts of the world. Lewis, what's the situation at Polygroup International, and how much are you affected, and how are you managing through the additional costs of inputs?
The costs are increasing. For example, PVCs increased 50%, copper has increased 50%, papers increased 80%. These are not costs that we can pass along to our customers. So we're seeing these come in terms of raw material. We're making the WIP, and when we ship out, we have to be able to, number one, try to help our customers understand where the cost increases come from. When they do understand, they do accept some increase together with us as partners. But the rest of it, we have to deal with it ourselves. And that comes from automation, cost decreases, finding efficiencies within a supply chain and our operations. And that's the way, if we're able to do this and continue to do this well, that helps us maintain our leadership position. If we can't, then we'll lose it. And so it's imperative that we're able to maintain and manage our costs through this inflationary period. And hopefully it will start to taper off soon.
Hopefully, yes. We saw the numbers the other day in the US. It was slightly better. I wonder, Lewis, when you talk about it, inflation and the cost of inputs and so on, does that require some greater coordination between your treasury function and with other departments such as procurement? You have to be much more aligned than maybe previously.
We as a family business of our own, we manage everything in very high touch format. So large purchases, large decisions, we manage as a group, as a very tight-knit family. I have 3 other brothers in the business, and so we talk very, very often. We hold procurement with our own hands, and so these are things that we do personally to ensure that we can become as efficient as possible. But yes, we have to talk very closely to our external partners as well. For example, when we talk to BNP, they need to help us with all these purchases of raw materials upfront. And these are extending tenures, drawing loans down much earlier than before. So as we have these conversations and they understand our business more and see that we are a leadership position and we continue to be a leader in this business, they see us winning in the long run. So they're here to support, and we really appreciate their help with us. Otherwise, as a manufacturer, we are actually highly, highly dependent on our creditors and our banking support in order to run this entire operation.
Lewis, apart from inflation, there's also all sorts of other volatility, currency volatility. I wonder, when you think about all of those aspects, and you touched on kind of extended tenors and earlier drawdowns, what other things do you consider helpful? What do you look to your banker that you consider helpful?
One thing that's very interesting about our business is that we sell to the US and the European market, and that means our collections are in US dollars. However, a large part of our expense is in renminbi. And so when we spend money, we spend in renminbi, we collect in US dollars. So the foreign exchange and how it's moving is highly, highly important to our profitability. And so together with BNP, we actually have a large portfolio of renminbi hedging, a natural hedge for us, where if renminbi appreciates, we're able to receive subsidies. That helps our business. As we continue to do that, we try to balance things off that way. But it's an overall balancing act for us at all times.
Lewis, given the challenges we are seeing, even in terms of logistics, shipping costs, it appears that your decision to open in Mexico 10 years ago rather than in places nearby turned out to be quite fortunate.
Yes, it was a diversification strategy for us. We were looking for a China +1 strategy for manufacturing, and we're looking all over the world. Everybody was moving to Vietnam, Cambodia, but we've come from Thailand ourselves many years back, and so we know Southeast Asia very well. And when we were looking for another place, Mexico made a lot of sense because the majority of our shipments do go over to North America. And so we decided to open in Juarez, which is right across the Texas border. We did that about 12 years ago, and during that time to today, we discussed TPP and also NAFTA and all the tariffs that has come in place. It's come in a blessing for us because we've avoided all those issues. And we've able to, especially these 2 years, been able to manufacture a lot of goods and just simply truck it across the border rather than having to depend on ocean freight. So it's been a real blessing for us. The customers that we sell to love that we have that facility over there and depending more and more on it. So we do intend to increase our capacity over there over the years.
Yes. In addition, one of the new requirements of businesses today, in the face of a lot of the other volatility we're seeing, is that businesses need to build, expected to build sustainability, such as protecting the environment. And customers are also demanding more transparency in the products they buy. Share with us, Lewis, how is Polygroup International responding to these new expectations?
I would say we're partnering in two very important ways. First of all, we're working with our retail partners to try to come up with a program for reducing emissions. With our largest retail partner, we have a mandate that we will decrease emissions 20% by 2 years and 50% by 5 years. And so those are very important milestones that we have resources behind to try to push and reach those goals. Secondly, we're looking at our raw materials. A major raw material for us is PVC. And although it is extremely versatile and highly recyclable, it's currently used in many different industries, including the medical industry, and for good reason. And so it's extremely good plastic to use. However, knowing that there's a push to try to remove PVC from the supply chain, we have actually tried to use other materials to replace that. For example, PET, and looking at whether that is a viable material for our product. And so we're investing in new machinery that gives us the capability to use these new raw materials. We're upgrading our machinery to try to reduce emissions, simplifying our operations so that we use less overall in our operations to try to reach those two very important sustainability goals for us.
I know that, Tim, banks such as BNP Paribas likewise expected to play its part, right? Sustainability in finance is an important catalyst to move companies, industries toward the global net zero ambitions. Are you offering more advice today? And are your clients asking more help in this regard?
Yes, Danny, definitely. I think, when speaking with the clients, there's a lot more interest, a lot more motivation in reaching a low carbon emission, and, in terms of protection of the environment. Now, BNP Paribas, obviously, sustainability is at the heart of our business model. We work under the guiding framework of the UN's SDG goals. And I think, in terms of commitment, we have joined the Net Zero Banking Alliance. And in terms of financing, we have dedicated about 244 billion euro already in terms of financing to create a positive impact to the environment. I think closer to home across APAC, we work very closely with different partners so that we can, as an objective to help our clients, we want to build a deeper, more differentiated relationship with our clients who are focused on sustainability. So we work with our clients together with our partners to build a proper ESG framework, to come up with the appropriate KPIs that are meaningful, and then incorporate that into their sort of business model. And I think for us at BNP, it's not a product that we just pitch as sustainable. It's really a journey that we want to, accompany our clients on. And we have obviously different solutions to focus on those, and we'll continue to develop that. I think you'll see some examples later on in APAC and Hong Kong and other places that will showcase that.
And that's quite important. I think let's ask Cherrie perhaps to share with us examples or case studies of how banks such as BNP Paribas is integrating sustainable finance offerings for the clients.
I think last year we issued a Hong Kong dollar 332 million bank guarantee to Henderson Land's green project at the old airport. Yeah, the project met very high standard across a number of criteria, including the energy efficiency, material usage, water usage, indoor environment quality, innovation, and additions. I think we are also well known for our very stringent requirement for this project. So Henderson Land projects need to obtain the gold rating under the BIMPA's governance. This is a very comprehensive certification covering a wide range of sustainability requirements for the green properties in Hong Kong. And another case I would like to share with you is about we are working with a French retailers on the reduction on the carbon emissions. We partner with our external partner called CDP. Then the suppliers will provide all the information to the CPT, including the about the sustainability performance, about the environment. So each suppliers will be assigned a rating. According to the rating, we will provide them with the incentive, pricing incentive, so they will be benefit. We will also set some annual target, and also we will track the progression. This is to make sure that each supplier will have the carbon emission reduction in the long run. That is how our client and our bank work together, try to benefit the societies and the environment.
Thank you, Cherrie. Lewis, we are going through dramatic changes in the reconfiguration of trade. We touched on COVID-19, we touched on inflation, we touched on automation, but also there's this ongoing geopolitical tensions. I wonder, how are you viewing the future?
I'm very nervous, just like everybody else, just watching and seeing, and sometimes we don't feel like we have control over much of anything that's going on. So what we do concentrate on is things that we have control over, is making sure that we are conservative in our spending. We are keeping cash as much as possible. We're also exploring other areas potentially for manufacturing, because I think the world continues to need Christmas trees and swimming pools. And so we would like to be the manufacturer wherever that is in the world, whether it be Africa or Turkey or where else it can be. And so we're still looking for options every year, knowing that we might need to have a China +2 strategy very soon. And so we're trying to explore at this stage, conserve cash, and also be very nimble. And that requires a lot of contingency planning. And previously, every businesses have contingency plans, but never really needed to act on them. These are times when we really need to act on them, try to do dry runs and see what happens, and try to improve on these contingency plans, because these are times when these are really needed now.
Yes, absolutely. And in a way, great advice as well, listening to what you're sharing with us. I wonder, Tim, yourself, how do you advise clients? What kind of advice to be able to manage through all this rising volatility, age of uncertainty as well?
Yeah, Danny, I think the key word is first to listen before we can give advice. I think as you listen to Lewis and his plans, I think a lot of our clients, including Polygroup, they have to be very mobile and agile now to be able to operate now in a global sphere. I think as a banking partner, and that's really a partnership here, we need to be able to listen, and I think we need to supply the right information. So I think banks such as BNP work with our international network. We're able to do that. Secondly, I think we go back to Lewis and what he had explained. I think the supply of information, is key. Whether it's related to FX, rates, or just overall the whole supply chain, right? I think it's constantly evolving. I think as a banking partner, we have a lot of those information. I think it's our duty to supply that to our clients so that they can analyze, then we can work together on certain solutions to mitigate those risks, whether it's China risk, whether it's rate risk, whether it's foreign exchange. So I think, as a bank, we are moving obviously very quickly into digital, making sure that those information can be supplied to our clients such as Polygroup in a digital format, right? I think we've had that tested, and during COVID times, I think we're able to do that effectively. So I think, Danny, listening to our clients and constant communication are keys to help, navigate through this risk.
Thank you, Tim. Thank you also to all of you for sharing so much insights. Thanks, Lewis, for sharing your insights and experience at Polygroup International and how you are building resiliency amid the current volatile environment. Thank you very much.
Thank you, Daniel.
Thank you, Lewis.
Thanks also to Tim and Cherrie for your thoughts on the role of financial institutions such as BNP Paribas in assisting businesses like Polygroup International to be able to navigate the complex business environment of today.